The value of money is essentially finished. It wasn't long ago when dollar stores had products to sell for $1. We have watched central banks print the value of money away. That means your hard-earned savings and effort disintegrated for no good reason whatsoever. As time has gone on, we have seen prices continue to go higher and higher on just about everything, and incomes have not kept up. This has all been according to plan. You came here for the truth, so let me unveil that for you. Today we're going to talk about the value of money. We're going to look at what has been happening in the financial system to bring us to this point. It is extremely important that all individuals understand this information, but they're too busy keeping up with the Kardashians. Let's get into it right away. The black hole engulfing the world's bond markets. This is a very interesting article out of Bloomberg. Everybody should check it out. I'm going to cover some points from it, but essentially they talk about negative yields and how this is creating a distortion in the financial markets. If you are not willing to take risk, then your return is going to be low. If you're taking a very high risk, then usually you get a good reward. That's what it's all about. Today, there has been a moral hazard. There has been the creation of a world where there is no risk. If you look at the volatility index, the fake VIX index, it shows you have nothing to worry about. But suddenly, those who have been paying attention are aware that this isn't exactly the case. There's a lot going on underneath this, and we'll dig into some of that today. This is the share of Euro corporate bonds with a yield of less than 0%. Now, even the corporate bonds, so it's not just the countries, corporations are issuing their debt at less than 0%. And you can see here some of these companies. It just gives you an idea of the length of time over the top here. And you can see along the left-hand side, the rating. And so we have these very high-rated companies over the next, let's say, few year time frame are going to be offering you a negative yield. And it's not just one or two companies. We're seeing this becoming more and more prevalent. At the bottom, you could see those companies in Switzerland with a less than 0% yield pretty much throughout the entire spectrum. That's not a good sign, because although you might consider these corporations very safe and stable, it really begins to show you what's going to happen in the future, what the expectations are. $13.4 trillion of global investment-grade bonds have a negative yield that is nearly 25% of the $55 trillion total. My goodness gracious. You can see that here on this chart. Percentage with negative yield is on the right-hand side. On the left-hand side, market value in US dollar terms. You got this over time expanding very clearly, and it just shows you that something brand new, negative yield, is expanding at such a rapid rate. There's no stopping this. They're not going to go in any other direction but down. That's what they are showing here on this chart. I've talked about this quite a bit. This just gives you some more information. Market value of investment grade bond index members, subset of the full bond universe with a negative yield. Just in the last little while, we have added trillions of dollars worth of negative yielding debt. I can't believe it, but that's what we're doing today. We're destroying the value of money, and this financial system is truly going to break. On the right-hand side, it just shows you the proportion of investment-grade bond index members with a yield of less than 1%. And of course, over time, this has been increasing. From that Bloomberg article here, how much is being bought? Negative yielding debt topped $13 trillion in June, and it's doubled since December, and now makes up around 25% of global debt. In Germany, 85% of the government bond market is underwater. That means investors effectively pay the German government 0.2% for the privilege of buying its benchmark bonds. The government keeps receives 2 euros for every 1,000 euros borrowed over a period of 10 years. But you look at it and you try to think as an investor, what's going to happen 10 years from now? Well, I can be certain that Germany is still going to be able to pay its bills. Therefore, if I lose just a little bit of money, it's okay. This is what those in the financial industry have said, but oftentimes you don't actually hold to maturity anyway when you're a trader doing this as a business. But I think it's just important to show you what's happening. The US is one of the few outliers with none of its $16 trillion debt pile yielding less than zero, but across the world, strategists are warning that the problem may get worse. We have seen actually numerous reports about what's going to happen in the next crisis, that the US will have to do the same thing as all of the rest. A timeline for affordability. How have home prices and household incomes changed since 1960? This can give us a good idea of what has happened with the value of money. Not looking at the bond markets, not trying to look at indexes. We are actually looking at the prices in things that we make, that we own, and it gives us an idea of how things have progressed over the years. You're not going to notice it day to day, but of course over time, you're going to get an idea. Growth rate of median home prices versus the median household incomes versus the median rents nationwide. If I didn't show you at the bottom there all the labels, I bet you could figure this out, because at the very top, the blue line, the median house prices, they have increased considerably over the years since 1960. If you look at the median household income, that's the red line. It just shows you that while they have increased nominally, they have not kept up anywhere near the price of a home. And that's a problem for a lot of people, particularly young people trying today to come into the market and buy a home. They can't afford it. So they have created these new co-op living spaces where they have bunk beds. They're like a dormitory. And this has become more popular in recent times simply because a lot of people cannot pay the bills. It's very expensive. The way that we are seeing this today, the value of money, what we're making when we go to our 9-to-5 jobs, while we create our businesses, the value of that money is truly diminishing in comparison with what we see with these different things that we have to buy. We have to live somewhere, whether we're renting, whether we're buying, whether we look at the food prices, food inflation, according to the government's own numbers in the United States, the last time I checked was 1.6%. I don't know what kind of statistics they are looking at right now, but it is far, far greater. And of course, we have the shrinkflation tactics that these companies use. I've talked about this before, done entire videos about it, where you can see that, for example, you buy a bag of chips. There used to be 500 grams in the bag of chips. Now today it's, let's say, 300 grams. And that just shows you that they put the same size packaging, but less food in there. Technically, it has become more expensive, but people don't see it. Well, I've always been buying that container. It's the same thing, but they don't look at the actual measurement, the quantity contained within. And that just shows you the value of money is declining. But if you're not paying attention, you're not going to see that. Home Affordability Index. Look along the coasts and you can clearly see the more expensive areas. The red areas are in the typical cities. We're looking at San Francisco, LA, New York, and so on. Just showing you how this really applies to the average individual. This is where the primary part of the population lives. They live along the coast. In these major cities, we have watched the affordability decline and the different prices of everything increase. The wages simply have not kept up. If you make over $100,000 in areas like San Francisco, you still cannot afford the regular living lifestyle. Many people have to commute for 2 hours in either direction per day just to be able to be in a place like San Francisco, because that's maybe they're in the tech industry, they need to be in that region, and that's just showing you what is happening with the value of money. It's not keeping up. And last but not least, price to income ratio over the years, one of the most important indicators that you can follow for real estate. And you could see that very clearly as time has gone on, this has become worse and worse and worse. But if you compare this to what you can see in Canada, for example, in many other countries, this is extremely different. 3.6 is nowhere near what you would look at in some of these major cities around the world. Nothing even close, nothing compares to what we can see in places like Vancouver, Toronto, Hong Kong, London. But of course, it does apply the same if you look at New York, if you look at San Francisco, and so on. I think the best thing to do is not to look at the inflation numbers that are provided to us by the government. It is important to be able to do this on our own. You could take a basket of items. Maybe it's something that you've been purchasing over the last 20 years, 30 years, 50 years, whatever it is, and you can see how that has increased over this period of time. One product itself is not very good to do because there could be things that affected the price of this particular item over the years. Maybe there's a shortage, maybe there's a demand, maybe there's not enough supply, who knows what the situation is. But if you take a basket of things, that gives you an idea. That's what they are trying to do in a manipulated way with the CPI. But if you do this on your own, take, let's say, 10 different things. Maybe it's your electricity prices, maybe it's your housing prices that you've been paying, your rent prices, maybe you look at different food items, your gasoline, so on. Take all of that together, try to measure it. Well, maybe it's increased 5% a year, 10% a year. You can simply work it out on paper very easily, and it will show you no way near what the government's numbers are telling us, and that's just the way it is. If you found this video informative, hit that like button. I do appreciate it very much. If you want the financial education you were not taught in school, these two books have everything you need. All the details from A to Z are located in these books, so definitely check them out at the link. If you want the audiobook, that's available at themoneygps.com. Wait a minute, don't go anywhere. You got to watch this video. It is so important. It connects in with the data. Click on it and I will see you there.